Welcome back. This is Elite Business Live. I'm Ollie Barrett, co-hosting throughout today and tomorrow, Friday as well, with Hannah Previtt. You've kept your questions flowing through that session, and we've just been hearing from Simi Swill, who's head of SME banking at Starling, a challenger bank, doing things differently, and also very proud to talk about some of its customers. Very refreshing, getting a lot of inspiration there. I wonder actually about banks and their ability to connect their customers with each other. That might be one that we'll get down to momentarily. Now, let's continue the theme as we get ready to welcome the panel, who have appeared as if by magic. How nice to see you. It's a bit of a reunion, actually, because I get to see Richard Bearman again, and also we get to be joined on the line as well. But let me tell you who's here. Catherine Young. Welcome, Catherine. You're the founder of Thinkroom.
Thank you.
But you've worked with some massive organisations over the years, and that's meant that you've worn a number of hats. But just give us a sense of what's keeping you busy these days.
Sure. Entrepreneurship development space, really throughout the African continent and into the UK. And entrepreneurs do keep us busy. So really Thinkroom consulting organisation, work with a lot of the corporates to get their strategies around SME development right. And then we've got Grindstone, which is an accelerator, and the Grindstone Fund, and we try and help them with money. So that's what
So when you say Grindstone, is that of global reach? Where might we see more?
African, yeah, exactly, and with amazing ties between Africa and the UK. So we'll talk about it more.
No, very good. Well, I'm looking forward to unpacking that. Lucy Mullins, I get to welcome you back to the stage here at Elite Business Live. You're the co-founder of Stepladder. And this is this really hit me exactly a year ago. Very innovative. You're helping unlock something which for a lot of people can seem out of reach, which is a house or a home. More importantly, tell us why you started it, because there's often that sort of, you're scratching your own itch, you've spotted a problem worth solving.
Absolutely. Well, it's a huge generational challenge. I'm sure for people listening, if you have bought your own home, you know somebody that wants to buy their own home. And often it's getting that deposit that's the hardest piece. So we started Stepladder, my co-founder Matthew and I, to help people with that education, but also how to raise that capital for the deposit, which is the stepping stone to getting on the property ladder.
And we'll dig into it. But how did you get that started? Was that on your own dime? Did you bring others in?
That was with a friend and family round to start with, and then some seed funding.
Yeah, got it. Well, I want to know more about lessons learned along the way. Richard Bearman, you're the Managing Director of Startup Loans, but at the British Business Bank, because I guess Startup Loans sits inside that extraordinary organisation. Startup Loans, it is a bit Ronseal, does what it says on the tin. Just give us a sense of the scale of the programme.
So, we support startup and early stage businesses. And we provide loans up to £25,000. So that's sort of really early stage funding. Last year provided £125 million, a record year for us. And we continue to sort of grow and support the businesses. I think something that's important to also add is we also provide support. So that support to the entrepreneur both pre-getting the loan and then most importantly after they get the loan, to really give them not just the funding but also that support to help them really have the best chance to be successful.
So it's sort of cash plus.
Yeah.
Would you call it a mentor, an advisor?
So mentoring is a big part of it, but also there's other areas as well. So a range of different things. But at the moment we launched last year Learn with Startup Loans, a whole range of digital training that is provided in partnership with the Open University. So a range of support.
Love it. So this is Startup Loans. We'll hear more about that. And welcoming back a favourite as well, Gary Turner from Xero. How are you, Gary?
I'm great, Ollie, and great to see you, albeit remotely today.
Indeed. Well, Xero is an incredible success story. This is Xero. Huge personal fan. And Gary, I see you as sort of very entrepreneurial. You basically co-founded it here in the UK, right?
That's right. Yeah, we've been going for, oh my goodness, the decade before last. We're getting quite mature now as a business, but we now have over 2 million businesses globally and over 600,000 using Xero to manage their business finances and accounting. So it's been a busy time.
Yeah, and just to be absolutely clear in terms of how you work, you put that tool in the business owner's hands. You're not necessarily offering it to their accountants. How does it work?
We do both, actually. And one of the big things is that a lot of very small businesses clearly at the beginning And even when you're mature and you're running a small business, you perhaps can't justify the expense of having a full-time accountant on the payroll. And so the role of public practice accountants is a very important one for the small business communities. We serve both the accountant community to help them support small businesses, but we also have hundreds of thousands of businesses that go solo and manage their accounting with Xero also.
No, great. Well, as you can see, tuning in, we've got a formidable panel assembled, and your questions are going to really power this session. So please do get them coming in that screen. You've got the chance there to interact, or on our hashtag EBL 2021. My first question, we're going to keep this quite sort of a fast moving, because I want to know how important it is that a company at its core has the financial smarts, or frankly, whether with brilliant partners, including some of you, we can sort of patch it in, outsource it, surround the company with it. We'll get a quick take from you, Lucy, and then Catherine, and then we'll go around. But what do you think?
I think it's really important, actually. I'm very lucky that my co-founder, Matthew, has 20 years experience in many areas of finance. So I can't quite imagine raising the money we've raised and doing the things we've done without that. I think it's really important.
So had you not had it, how important would it have been to get it in? Or would you have said, look, it's not there, we've just got to go elsewhere? Or would you have patched it into the team?
There are clearly great advisors, but I think you can spend a lot of money getting external advice. And if somebody has got the heart of the business within them and really understands, I think Simi was saying at the end of the last talk about the commerciality and the financial smarts, but if you can map those two together and you really understand the business model and you've got the financial smarts, I think that's really key, actually.
Okay, now, Catherine, your sort of hot take on this, what do you reckon?
Yeah, I completely agree. And I think as we work with businesses, they don't all have the financial smarts, but the importance of what you're raising, Lucy, to then get a partner or anybody that can help. We always say, can you sell? Can you do the books? Do you understand them? And lastly, is your product right? And if you don't have the financial smarts, get yourself surrounded very quickly. And even if that means bringing in somebody junior to start to get into the business and work with you, but you have to have it for sure.
Right, so on this then, Richard, you're probing these startup loans applications. If you're not seeing that skill set, red flag?
Well, there's always, it's a concern, but then that's why we have the support there for the applicant. So the purpose of that business advisor for the applicant when they come through to us is to work with them on their business plan, to help them understand what cash flow is, to get them credit ready. Yeah. So yes, it's always a concern because you want to make sure the entrepreneur sort of understands what they're getting involved with and how it's going to work, and ultimately make sure that it's a business we can fund. But by giving them the support, position startup loans so much more positively, and I think also gives the confidence to the applicant that they're doing the right thing.
Yeah, what's your take on this, Gary? Because of course you're surrounding people with the tools to help them be better at their finances, but what's your take on how important it is internally?
I think it's horses for courses. I think it depends on what the problem is you're trying to solve. And what we've seen in the last 10 years, I suppose, since the advent of more easily accessible, more affordable cloud tools, is that the business as usual stuff, the running the business, the making day-to-day financial decisions, getting the right insights, has been democratized. More people without the financial smarts now have access to incredible insights and dashboards and tools that help them run their business operationally. When it comes to perhaps questions about planning or strategy or how to deal with some of the concerns around the pandemic, then I think I would always advise businesses, you can't hire all of the capability into your business, but you definitely have access to that in your local high street accountant or your local accounting firm. And they're not just there to do your tax returns and all the kind of things that people associate accountants with. And we've seen accountants during the pandemic really step forwards and provide that essential, timely expertise to small businesses. And so I think it depends on where what you need the smarts to do.
Yeah, and that's helpful. And just very briefly, Richard, if someone's been at the Lucy Mullins School of Thought and says we need this on the team, they've got a finite amount of time and money and they just want to upskill personally rather than bring someone in. How do they spend that time and money?
Well, as I said earlier, one of the things we have is that educating yourself to build your skill set up, which is why we have the Learn with Startup loans. It's that ability to understand where potentially your weaknesses are, and if you haven't got people around you. But I think it is important to think about that environment you operate in. It doesn't have to be people who are employing. It's actually having the informal and formal mentors, people around you that can just help and support you. Talked about friends and family to start up. Often friends and family are as important for the advice and the expertise they bring. But ultimately, it's taking responsibility for helping yourself develop in the areas where perhaps you have some weaknesses.
Yeah, no, that's very helpful. Now, Lucy, do you mind me asking, with Stepladder, to what extent you needed or took advantage of, in a positive sense, the government support over this last 12 months?
Yeah, absolutely. It's been great, actually. So we furloughed some of the team over the summer. It was really helpful. Clearly, when the pandemic hit, people weren't immediately thinking, oh, let me go and buy a new home. So Stepladder quietened down. And one really important thing for us was to have a sort of pivot plan up our sleeve. So we formulated something called Stepladder Homeschool, which was about educating people to buy their home, like an online training course. And actually, as people's confidence came back towards the autumn and the importance of home became more important, people thought, oh gosh, I might be working from home all the time, I want a home. Community suddenly became very important, and financial well-being became very important. The demand for Stepladder came back. So furlough was very helpful to us. And then we did a Future Fund application.
Now, Future Fund, this is particularly for sort of higher growth, tech-driven startups as well. Out of interest, to what extent does that come with the human support that startup loans get?
Sorry.
So with startup loans, Richard's reminding us that it's not just the cash, you get a mentor as well. I'm just wondering, on something like Future Fund, is it just the cash or is it plus?
So it's actually the person that applies is a VC fund, and then it's partnered with them. So actually, it's all the support you get from your VC fund. And I think the point I was making earlier about having the tech smarts on the team is when you get your first VC investment, I think that's essential, because there can be some very odd terms in those term sheets. And actually, however much knowledge you've got, you're really going to have to go into the detail of that. Once you've got those partners on board, they're there to support you actually with the Future Fund application.
And I'm very conscious that we've got Richard here, obviously, with the British Business Bank. But before I patch both of you back in, Gary, very briefly, how well do you think government has navigated this? But more importantly, what do you think its next big challenge is in getting the right support to the right businesses at the right time? Oh, now, Gary, I'm just going to pause us because we're going to bring you back on in terms of your audio there. Carry on, please.
Yeah, sorry, Ollie. It wouldn't be 2021 if somebody didn't forget to unmute. I think obviously there's been a whole raft of support packages put in place, and no matter how broad that is, there's always a community of businesses that haven't been supported, and so it is a difficult task. And I don't envy the government, and I know that lots and lots of businesses are crying out for more support. But I think it has been pretty broad. I think going on from here, I mean, the vast majority of customers that we service are small and medium-sized and predominantly small businesses. And we think one of the essential aspects that perhaps needs a bit more support is that small businesses, we think, hold the key to unlocking future employment. I mean, when you consider that over 2/3 of our economy is occupied by small businesses, and actually they contribute over half of our GDP. They're a huge contributor to the overall well-being of the economy. And we also think that jobs and the future of jobs won't necessarily be large businesses, it'll be small. So I think we would love to see the government investing even more to create growth opportunities and create jobs among the millions of small businesses that we have.
Yeah, and Richard, from an insider's perspective, if you like, what would be your advice to someone tuning in, saying, it's a point we made a bit earlier on in the show today, these offers can sometimes be difficult to navigate, difficult to understand what's available and to who, and so a lot of people can switch off. What's your tip?
Well, I think there is an element of having to persevere to understand what the offers are and what's available to you. I think there is always a risk, particularly with the smaller end of the business market, that they can leap in and grab the first bit of funding that's made available to them. So I think it's important to take the time to really understand what the options are. And yes, it can be difficult, it can be complicated, so seek support, find advisors that can help you, be they friends or family or more formal, but understand what the range is, and then you can find the right bit of funding that matches your need at that time.
Yeah, and we're going to have some specific questions coming in, which we're going to go to. But Catherine, you've supported so many businesses. Who do the best business leadership teams surround themselves with to make their biggest financial decisions? Who's in the room and who do they often forget to invite into the room? Because that's been on my mind a lot.
Yeah, love that question. So definitely depends on life stage of the business. So those very earlier on just really don't know what they don't know. So they may be surrounding themselves with whoever extends some help. And as they grow throughout, the help does, especially if they want to go for funding rounds, reach broader into a VC or into a seed funder, which then unlocks a whole mentor coach environment. As Richard also said, training, mentoring for business loans. So depending on the life stage, really, it depends who they surround themselves with. And what we do find 10 years on, as an example, if the business gets 10 years on, what they've done in the earlier years is a good determinant of what will happen in the future with financial prowess, with financial management, etc.
So on that, Lucy, advice to your former self, how could you have been more financially successful? You've been successful in a lot of other measures too. Had you known something a bit different, what would you say if you go back to just starting Stepladder?
Yes, it's a tricky question for me actually, because my co-founder Matthew did the early raise before I joined. So in a way, I'm very lucky. I sort of stepped in and he'd done that early friends and family round. So I guess my advice would be, get yourself a business partner that complements your skill set. And I say this all the time, I'm interviewed, but it's absolutely critical. When I joined, Matt was going out talking about the product to customers, and he was talking like a highly, highly technical financial person. And the customers were like, what are you talking about? I came in and said, oh, well, this is how it works. He said, well, how do you do that? So I think it's finding that right skill early on and identifying it. So really know yourself, really. That's absolutely the key piece of advice, isn't it? What are your strengths and what can you not do before you think about taking a pound of anybody's money?
Yeah, got it. Brilliant advice. Right, let's get some questions in. They're going to be quite specific. One here, because of course, Richard, I remember pre-British Business Bank, I think HSBC for a number of years as well. So this may be coming to you. Jesse, I'll call them Jesse for now. I'm an entrepreneur who has had a county court judgment, a CCJ, for about a year. At what point will a bank or lender look beyond the CCJ if I present a unique and profitable business that needs funding? That could be quite a demoralising position to find yourself in. I don't know whether you have experience in answering that kind of thing.
It can be demoralising, and it is something that will make that lender sort of stop and pause and think about the opportunity. Different funders have different rules around that, so I think there's an element of shopping around. I think also if it's a CCJ that's sort of sitting there on a file, I think also being open and honest and explaining it is also important. But it will be a factor, it will be taken into consideration. But I'd say look around. Different funders have different views on ultimately their credit appetite, and that will be taken into account.
Yeah, purely out of interest, Gary, I made the slightly provocative suggestion earlier that by and large, switch around the logos and the colours, all banks are the same. To what extent do you agree with that?
I think there's been a big change. So I think my quick answer is I don't think I agree with it completely. I think it can be hard to differentiate, and banks perhaps have to do a better job of really being clear about what sets them out. And there's so many new innovations in banking at the moment. Many of the new banks are just talking about the new stuff, and they're all doing many of the same things. But ultimately, it comes down to the customer experience, the level of support that the customers get. But I think there has been a big shift. I think it's fair to say that traditional banking really didn't lend itself to small businesses, if you excuse the pun there. But I think that's changed. It's definitely changed in the last 12 months.
Well, let's get.
I think,
Let's get Richard in on this as well. But Lucy, what's the single most useful thing a bank's ever done for Stepladder?
Oh, that's a good question. I think trusting Stepladder as the deposit to then lend a mortgage to our first customer who had this Stepladder deposit, and they said, well, what's the source of funds of this deposit? And they said, oh, Stepladder, it's a ROSCA. And everybody goes, what are you talking about? So actually, I think those first banks that came on board and said, actually, yeah, why isn't this good money for a deposit?
Right, and just remind us of ROSCA, is that an acronym? Is that?
Acronym, Rotating Savings and Credit Association, used around the world, many different names, ADJO, Chip Fund, Partner Hand, around the world.
And with hindsight, that trust, was that a human placing that trust in you, or was it
100%.
You got the right verdict from the form you filled out?
There was a bit of filling in forms and computer says no, and actually once we'd navigated the layers and found the right person, looked them in the eye, they'd looked at our experience, they'd realised, oh, hang on a minute, these people are probably not going to run away with my money. This is probably not a fraudulent company. They're like, okay, let's give it a go and see if it works. So, your question at the end of the last session on humans, I think humans are absolutely essential.
Got it. Right. Well, Richard, you're nodding. And by the way, we're not going to stay on banks, but this is very important because there must be questions that people don't ask their bank that they probably should.
So I think the part of the question is, or the answer is that just to remember that it's not just about banks.
Yeah.
I think that's the thing is that there's been this almost an explosion over the last few years of different organisations that provide funding for businesses, particularly the small end of businesses, your peer-to-peer and your fintechs and the challenges coming through. So there's been a big expansion and specialist funders that do just very niche areas. So it does make it more difficult in the sense you have to sort of dig into them and really do that research. But I think there has been a real breakout of different varieties and options.
Yeah.
So I think for me it was to make sure you look across the range of different options that are out there.
No, got it. Well, I've got a blockchain-related question coming up that I might chuck Gary Turner's way. Just warning you, Gary, momentarily. However, Catherine, what do you say to the company off Richard's queue there that says, look, I'm looking at other sources of funding, but I'm finding it really hard to make connections and build relationships in a virtual world. What practical advice have you got for that guest?
The most practical advice we're currently giving is that your customers may have changed, but they're still a source of funding.
Mm-hmm.
And in the interim, buy yourself some time and go back to old pipelines, go back to leads you haven't completed. Their needs may now have changed, where they actually can just, in the short term, they're quicker funding whilst you sort out the rest of the funding.
Got it. And what about, Lucy, if you wanted to confront that challenge head on and say, look, on with the show, we're looking for angels, we're looking for VC, private equity. Any tips you've picked up personally or through your peer group?
In terms of keeping those relationships going.
Yeah, but particularly virtually, right? Whether it's building new connections or trying to close a deal in a pandemic.
Yeah, well, I think as a natural born extrovert, I've actually found it really easy. And people have more time now. So actually, if you message people and say, oh, let's have a virtual glass of wine, cup of tea, whatever, I've actually connected with way more people over the last year than I ever did when I was actually travelling places. So, there is that time element, I think.
Yeah. But if I was pushing back gently on that, I would say coffees and chats good, deals much harder. Or have you been able to close stuff as well?
We have been able to close stuff. Yeah, I think it can be harder. I think it's certainly if you're pitching. We're doing a crowd raise at the moment, and so we're in kind of pitch mode. I think you have to have, again, it's down to the strengths and skills. You've got to have somebody that is going to be naturally quite high energy on camera. You've got to give a little bit more on camera.
Top tip you've learned so far about crowdfunding, just very briefly?
It's a lot more work than you think, and the compliance side is horrendous.
Is it? And this is equity crowdfunding.
But now we're launched. It's great. It's actually really good fun.
But I think Richard's right to put it in the mix as one of the many options. Gary, I'm going to chuck this question to you, but others may have a view. Peter Blacker asks, how about using blockchain? Big open question. What do you think of using that platform as a financial solution? Gary, you happy to talk us into that?
Yeah, listen, I think, blockchain is an incredibly interesting concept. Clearly most associated with crypto and that kind of emerging area. I happen to think that we should regard blockchain as almost technology from the future that actually is going to be solving problems for us in the future. There's a lot of people rooting around thinking about how to apply blockchain to everyday problems in business, and there aren't that many, and where blockchain wouldn't be overkill. But I think it is definitely a future solution looking for future problems, and we've yet to invent some of the future problems, I think, for blockchain. But I think
I know as a sort of resident trend spotter, I go to Gary, but others might have a view. This is a distributed ledger in terms of trust, really. But Catherine and Lucy might have views on this.
I'm not informed enough, really. I can give you just a very honest opinion about blockchain is very often used as the solution to everything.
Yes, it's the buzzword.
It's the buzzword, and truly, if you say you're another Uber or you're doing blockchain, I shut down.
It's a red flag. Okay, Lucy.
I'd go phone a friend at this point.
Would it be Richard though?
Richard.
Well, I can offer an opinion. I think it's something that it's worth remembering in my experience that it's you can start seeing it have an impact on the journey or the process or the system, but it's always important to remember behind that, actually usually there's a sort of fairly traditional funding sort of instrument. And also to remember for all forms of funding, and if you're going down that route is just as important, is the funder, the ultimate question they want to know is, how am I going to get repaid?
Yeah.
And it's sort of, and with all the sort of products and different versions that we look at, that's sitting at the heart of being the digital tool that's assessing you or the person.
Yeah.
Remember, that's what they're thinking about. And if it's a blockchain, it'll be exactly the same.
Yeah, no, it's a great reminder. Okay, well, we've just got time for maybe one more question. Let's pick one out here. How about, well, this is, I guess, about financial goals. What are some short-term and long-term financial goals that SMEs can make when it comes to increasing profits and reducing loss? There's a nice big open question for you, but you're living this every day, Lucy, but I'll get a quick thought from each of you.
Yeah, absolutely. And I think this is where you've got to know what your North Star metric is. Sound like one of those sort of Silicon Valley entrepreneurs going about North Star metrics. We're going through a really good growth program at the moment, and it's absolutely about not focusing on too many.
Give them a name check, by the way, if you recommend it.
Oh, Startup Core Strengths, absolutely fantastic.
Good.
They are coaching us through every week and just really getting that discipline on the North Star metric. And I
what's
think
yours, am I allowed to ask?
Absolutely, it's the number of sign-ups that we get into our Stepladder circles. And I think it's easy to focus on, you know, when you've got a business, there's so many different things you want to be checking on. How much money are we spending per customer, and how much money are they bringing in, and how many people are they referring? And you can just, you can set yourself too many goals. Have that North Star metric, and then work out what are your key steps and your rate limiting steps to make that number grow. And that seems to be the magic.
So on goal setting, Gary briefly, and then Catherine, and we'll come through to Richard.
I'm going to make mine really topical. I think for 2021, businesses need to increase the frequency of how they're measuring their performance. I think we're about to come out of lockdown. The economy is about to switch back on again. And it's so unpredictable that if there was one thing I'd recommend, it would be that no matter whether you're a big business or small business, you've got to track your numbers, whether it's your North Star metric or your cash or whatever is important in your business, weekly, if not daily, because it's going to be a bit of a ride over the next few months. And so frequency of engagement in your numbers, whatever they are, I think would be the biggest piece of advice I would give.
And Gary, do you think, to what extent do the best businesses share their numbers willingly with the whole team? Or is it something that the FD and the CEO huddle up with in the corner office?
I think it's changing. It used to be very much the board or the management team got to see the kind of monthly management accounts. But I think in most contemporary organizations, or at least the trend is heading towards, really sharing kind of dashboards, whether it's the metrics, whether it's NPS, whether it's growth, whatever those important goals are for the business, they are much more socialized around the business because it's important to get everybody behind them. And so I think that shift is changing.
And let's be honest, Catherine, that could be quite a scary picture for some of those snapshots as we go through this year.
Absolutely. We, when the pandemic hit, we really got the businesses in our portfolio to go give us 3 scenarios, best case, middle case, worst case. Yeah. We're still managing them on worst case. And really those weekly stand-ups, you be counted and you distribute the targets throughout the teams so that they can own them. And I do agree there is a change in management sharing more freely because the numbers need to come in, right?
Yeah, but also I get the idea when Gary talks about this, and of course Xero lives and breathes this, it's not having a Fitbit for the business.
Absolutely.
At a glance you can see where you are. You don't wait for the next printout.
Right. The numbers can make you do informed decisions. Without them you can't.
Yeah, I like it. Now, Richard, do one thing for me if you wouldn't mind. Bust a misconception about the British Business Bank, because it can seem this sort of hulking organisation. But just tell us what we should be looking to the British Business Bank for, or perhaps it's not as consumer facing in that sense, but just help us, just take us one step further inside it, because you're clearly supporting so many companies.
Throw me there. I was getting ready for my
your goal setting.
My goal setting.
Yeah, switch it.
So I will just say on goal setting, I think what's important is for the businesses to be planning to be agile, because I think different sectors, different parts of the country are going to come back at different times, and it's going to happen quite quickly. And then to build on what Gary was saying, I think therefore keeping an eye on cash is going to be critical as you start to get that growth. Yeah. In terms of the British Business Bank, I mean, it's actually quite a relatively small organisation. Perhaps one of the misconceptions is that the hulking piece, it's quite a small and I think actually quite an agile organisation. And I think what we've done over the last year with not just Future Fund, but bounce back loans and interruption business loans and the large loans, CBIL, CL bills, I think really does show that agility of being able to to act ultimately on government policy, but to deliver and provide funding for those businesses.
Good. And just remind us, when does a business become too old to qualify for a startup loan?
A startup loan. So 2 years. So early stage businesses, any business up to 2 years old, we're there for you, and we're very happy to try and help you.
Right, exactly. But other products are available, as we've heard already. Okay, well, I'm sorry we don't have longer, but Hannah is going to grill you all backstage. Gary, it's so lovely to see you. Gary Turner, who's joined us down the line. Catherine, of course, welcome back to our stage. Lucy as well, thank you. And Richard, always good to see you. Thank you so much, everyone. As you leave the stage, go and find Hannah Previtt. Thank you very much indeed. Excellent. Right, here we are at Elite Business Live. Thank you to those who've been using the hashtag EBL2021. It's been a great way to look forward to today, actually, just seeing who's going to be tuning in. One note about our next keynote, that's coming up at 3:30, and that's going to be Carl Stephen Patrick Hunter, who's a phenomenal entrepreneur who has well and truly gone global with his business, on land and sea, as you will hear. So we'll be hearing from him about how he has kept sailors safe around the world, and fascinating business story it is too. By the way, there is also going to be a panel after that on overseas expansion. So now let me hand over momentarily for some backstage chat to my brilliant co-host, Hannah Previtt.
Thank you, Ollie, and another fantastic panel. And this is, as you know, one of the ones I was looking forward to, because I think financial resilience is such an important topic right now, particularly as many small businesses grapple with the burden of the debt that they've incurred as they've survived and battled through the pandemic. And who better to continue that conversation with than Richard. Hello. How are you enjoying your first in-person, presumably, event for a while?
Yeah, it's very different. I've been very used to only having that amount of me visible on an event, so it's been good. Thank you.
Shoes, trousers?
Shoes on for the first time in a year. Yeah, it's very good.
Excellent. Well,
I did think of coming in my slippers, but
I thought of doing the same. I might pop them on later. So, what would you say is your favourite part of your job? It must be really fulfilling, dishing out the cash to all those, really promising young startups.
Yeah, it is. The favourite part is when I get to actually spend some time with them, because I think you with all that you do, end up in sort of looking at the data and you're sort of saying thousands of businesses, that sort of thing. But when you get back to realising that every single one of them is an individual business with ambition and innovation and exciting sort of ideas, and that's the pleasurable bit, is actually spending time with the business that we've helped.
And I've got a question on that here. So people think that they understand what the British Business Bank is. They might not think it's there to support businesses like them. Can you kind of debunk some of the myths around the British Business Bank and explain perhaps it's there for all?
Yeah, so it's the government's economic development bank, and so our role is to support SMEs and particularly support them where perhaps there's a gap or something's not quite working in the advantage of the SMEs in the general sort of finance market. So the most recent obvious examples are bounce back loans and all the interruption loans that have been provided all the way through to Future Fund, and that's where we're working through delivery partners. So we're working with other organisations and we're helping them provide funding. And startup loans is another good example where we provide that support to early stage businesses and provide that funding to get them going, and also, as we were talking earlier, support to help them have the confidence to understand what the implications of the funding is, and then also support once they've got the funding to help them be successful.
Because not everyone has the benefit of a friends and family round, for example. We hear lots of people talking about it, and it's amazing if you have that, but some people just don't have access to that kind of capital, do they? I think I'd probably raise about 50 quid and half a packet of fags if I tried to do a friends and family round.
I think you're right. I think slightly sort of cheesy, but we feel that we're sometimes the friends and family for people that don't have friends and family with the funds to put in. But also, I think what's also important is how that also we should partner up with friends and family money. Again, it's that piece around making sure that people take as much opportunity that's there for them, and and then put the money where it's best suited, and perhaps keep some of the friends and family money back for research and development or areas that perhaps aren't as easily supportable, and then use the startup loans to get that early investment or the equipment or the whatever it might be to get that business up and running, and then you've got some friends and family money in the background in case of emergency or other opportunities.
So how have people been spending their bounce back loans, for example? What do they put on the application?
Well, I mean, they've been spending it on many different areas, and for some businesses and for many businesses, it's been about funding, really survival to get through this period, to get to a point of growth. Other businesses have been spending the money on sort of opportunities, and some businesses are keeping it in reserves. There's a huge range of different areas where they're using it, but it's now 1.5 million businesses have taken a bounce back loan, and we're really sort of proud that we've played that part in helping those businesses get through the last 12 months and hopefully gotten to a point where they're ready for growth as and when that comes for their business.
Mm-hmm. And thinking about kind of looking ahead and hopefully restarting those growth journeys, or some businesses that have been able to continue that kind of trajectory, is now the time really to invest for growth?
It depends on the business. I mean, it's so difficult to sort of generalise, but I think what the businesses have to be really planning for is to be ready for when the opportunity comes, and to think about, okay, when it comes, have I got the cash there? Have I got the funds there? Am I going to be able to invest when it's right for me to do so? So I think it's a more complicated answer, but I think it's about being ready to invest when the opportunity comes that's really important, and therefore spending the time to plan for that now.
Mm-hmm, mm-hmm. Okay, I have one last question for you. It's quite a tricky one. Save the best till last. So I'm sure you would have seen the Crunchbase numbers that found that in 2020 the amount of VC funding that went to female-led startups was just 2.3%, down from a previous high, would you believe it, of 2.8%. So why is it that women receive disproportionately less VC funding in your experience, and who should be trying to fix this problem?
Yeah. So it's a good question. I'm going to leave. No, it's a great question. No, it's a great question. So I'm just going to come back to startup loans for a moment. So we're really proud of the fact that 40% of our funding goes to female founders. Now it's different sort of, but I think that's an important point. And what we spend time thinking about is there anything we can learn from that then can perhaps be taken to other areas of the finance industry? And I think what's important, and what I take away from it, which I think is relevant, is that actually what startup loans provides, it provides part of it's not just the funding, it's around the support package, it's around confidence, and I think it's the confidence of the support package to sort of help people understand how to access the funding, and so therefore any areas of the market where perhaps they're underrepresented in terms of the finance they get, it's about providing an infrastructure around those individuals to help them get the funding through the market. So therefore it's around, can there be support structure? Can there be people to help decode and to help get through the layers that are there sometimes around certain funding, to help people sort of break through the layers, break through the sort of decode some of the language, and therefore access the funding. So I think I take from startup loans the fact that we spend a lot of time thinking about how we decode, make it simple, simplify some of the language to allow people of all different parts of the community access the funding. And I think what that leads through to, as I say, is those strong figures that we've got that ultimately say that the need is there, the appetite is there, the demand is there. And if you strip away some of the complexity in terms of how you get through the process, you can have a positive impact.
Mm-hmm. Okay, great answer, and thank you very much for bearing with me. Thank you, Richard. Lucy, if you'd like to come and join me. Thank you for that. There was so much brilliant practical advice for our audience. I think they would have really appreciated that. We talked a lot about kind of plugging skills gaps where you need to, and we mentioned mentoring a couple of times, and that's something I'd like to pick up on. People often ask about where you get a mentor. Having a mentor sounds great, but where do I find one? Again, if you don't have access to that kind of social capital, I suppose it can be super tricky. So have you ever had a mentor? And if you did, where did you find them?
I have a number of mentors. I'm actually a coach as well. So I really believe in having a mentor and a coach. And I know a lot of people think, well, what's the difference? And for me, the mentor is really somebody that's been there and done it in the same industry or had some similar experience. And I found my mentors, I used to run my own consulting business, and I luckily got partnered up with somebody who was a client who then became a sort of colleague and friend. And he was sort of 30 years ahead of me in what he'd done. So he became a great mentor. So just through that sort of casual, informal networking, I was able to get 2 really great mentors who've helped me get to where I am today, and part of the reason that I managed to get involved in Stepladder. And then I also think having a coach is very, very important, and that is really somebody that maybe knows nothing about what you're doing, that can be an independent kind of sounding board, can give you a different perspective on what you do. And so I actually think having a mentor and a coach is very, very helpful.
Wow. Yes, and does a coach, or is it the mentor that kind of holds you to account, makes you, take actions after the sessions?
I mean, possibly both. Traditionally, a coach will do that and hold you to account. A mentor is more likely to say, oh, do you know what, when I was raising my first £1 million for my business, this is where I went, or let me introduce you to somebody. And a coach will maybe help you more with confidence. I think to pick up on something that Richard was just saying there about the female founders, I'm not necessarily sure it's about simplifying it. That I had a little moment there. I was like, I don't think it needs to be simplified. I think it's much more around, the research on job applications where generally women won't apply unless they tick sort of 10 out of 10, but men will apply if they tick 2 out of 10. I think it's the same with VC funding. Certainly, I have a background that would suggest I should have been much more confident to go for VC funding, but I thought, oh gosh, no, we can't, because I don't think our numbers are quite right. I've been to business school. I worked at HSBC. I do have a background in finance, although, you heard me on the stage sort of saying, oh, well, I don't really know much about this. Actually, I probably do. I just don't say that I do. So I think that's where the coaching comes in, actually, to hold the mirror up, to challenge that imposter syndrome and to say, who cares if you've got 3 out of 10, just go for it anyway. It's that, just putting yourself out there.
Which is which is arguably even more important for female founders, right? As you say, with things like imposter syndrome lurking.
I think so.
People watching this will think, she's got it covered. That Lucy, she's got it absolutely nailed. Is there anything that you're absolutely rubbish at that you would?
I mean, so many things. So many things. How long have we got? I think it's absolutely to the point I said on stage around know your strengths. Mm-hmm. I know that I'm really good at talking to customers. I know that if somebody complains, I can turn them around and they'll become our biggest champion. That's my thing, and there are many things that are not my thing. So get a coach, get a raft of mentors, get a support team. I think that's absolutely the key. And I don't mean like people you pay, as in not PA's support team, but like an external support team of brilliant people with skills to help you.
Mm-hmm, mm-hmm. Great advice there. Thank you so much for your time today. It's brilliant meeting you. Thanks, you. Hannah. Thank you. Right, and last but not least, Catherine.
Hi.
Hello, how are you doing?
I'm good, how are you?
Very well, thank you. I just wondered if you had anything to add to this discussion we've been having about female-led businesses.
I've been jumping.
Have you been jumping up and down?
Absolutely right.
Yeah, so what's your view?
Yeah.
And, how can we solve this massive problem?
Yeah, we have a fund that we run ourselves, and I was just doing that introspection as you were asking the question, how many female founders have we funded, how many are in our support, and I think we're only about 25% there, 35, and I put hand on heart and thought, what am I doing about that problem? We should be standing up and be counted as a female and supporting other females, I think. And I don't think it's only a female problem. I think it's an everybody's problem. And I think how do we solve this problem? It's complex, and we will have to really, truly work together to get that done. Mm-hmm. And it's not going to be solved tomorrow, but if we start a bit at a time, we can. You know?
So who are the stakeholders? Who do we need to get on board to help solve them? Does the government need to step in? We've got startup loans, we've got
Absolutely.
the bounce back loans.
Yeah.
Perhaps
Yeah.
we need,
Yeah.
something that's more female focused.
Yeah.
What do you think?
So I always have this thing about, is it the government? It is the government, but it's also not the government. It's everybody. It's business. It's female foundations. It's VCs. It's angels. It's the commitment. I think, how do we change the behavior of people in the long run? It's the commitment of, do they really want to make a change or not? Mm-hmm. And it's not easy. We call ourselves a female-led fund because we are a female-led fund. We two, the investment partner and the managing partner are two females out of the 3, but I don't think we're doing it well enough. It's about much broader stakeholder engagement all the time. and solving the problem over a long time.
Is it also about visibility, so that women know that they can come to you? You know, that it's not about the education piece, as Lucy just said, but you know, sticking your hand up and saying, you know, we want female founders. Where are you?
Absolutely,
we're open for business.
Absolutely right. And as a female founder, being completely comfortable showing up as one, and not making an excuse for showing up. We had a group of females that we coached a couple of months ago, and there was a female in the audience, and I'm just as guilty at this, when she starts the sentence, sorry to say this, but no, don't be sorry. Speak your truth and speak your word. And I think it really is about showing up as females, and feeling okay to do so.
Well, I could carry on talking about the subject all day, but no, let's carry on and move on to some more questions. So we were talking earlier about the different forms of finance that you can raise for your business. So something that comes up again and again is around kind of equity. How much should you give away? We had Piers Linney, who was here earlier, and I did ask him about, you know, the allegation that gets made about the dragons. Are they greedy? Do they take too much of people's businesses? So how do you gauge, especially for a first-time founder, how much should they be giving away, or, you know, should they be seeking some kind of unbiased advice on that?
I absolutely love the question, and my response is always the same. Give away as little as possible, as late as possible. So bootstrap for as long as you can. Hang on for as long as you can. Also, there's a level of commitment that comes through bootstrapping. And of course, for real growth, for exponential growth, you can only bootstrap that far. So in your first rounds, know that your valuations will be lower. Know that your angel, your seed round, your first bit of seed round, your valuations will be lower. So it will be more expensive. So I always say your first round of negotiation, and I think Lucy made the point on stage, which was so valid, is that in the beginning, you just don't, you don't know how to necessarily negotiate those rounds. But the first round's the most expensive, because whether we like it or not, you set the valuation. Well, if we just look at what just happened on the news wires now with Roblox, I think they just got a valuation of 45 billion. They didn't know, but the point is, your first round's the most important, and give away as little as possible, and then really be strong in negotiating your deals. It's not a handout that you get from a VC. You're giving some of your business away. So be firm and do your due diligence on the VC, just as they will do it on you.
Well, it's interesting, isn't it? When you look at serial founders, they always give away less second time round because they're savvy to that. They know how the machine works. So I have one question for you from our audience here. So, and it's a really interesting one, actually. It's about churn. So, as a mature enterprise, how can businesses deal with the financial impact of employees leaving the company? Job hopping is becoming a problem during the pandemic, and I'm sure it's related to many of the kind of questions we had earlier around culture, etc. Obviously churn is never a good thing, but how can businesses mitigate against that cost, because it can be expensive?
Absolutely right. I always say, to keep the blood flowing in your organization, your churn needs to be 10 to 15%. If it's more than that, it's going to cost your business incredibly loads of money to get that done. So how do you mitigate? You bring the teams closer. I think what COVID has done for us, it's brought about a different type of leadership, a different type of style. We see those leaders who are much more empathetic, leaders who are much more open, sharing more, and just speaking through the issues. We're all human. We've just been in lockdown, the whole world, for a year, and we are in each other's homes, right? It's no longer about that you can separate work from home, and about doing that understanding. I think you can mitigate some of the churn. I think you can help some of the team. It's not only going to be good all the time, especially in the times that we're in, but it's about showing up as real leaders in the organization to try and mitigate some of the churn. But churn is not bad. You need the 10% at least.
That's brilliant advice there. So thank you
so
very
much.
much. Thank you. That was so valuable.
Thank you.